Welcome to qnawire.
In the discussion of the tax system, here we are trying to figure out if it would be plausible to assume a 20% increase in tax revenue if the sales tax sees an increase of 5% to 6%. And what we see here is that mathematically it may seem possible because we have this 6% that it's now at. And if we divide that by the 5% that it was at and multiply it by 100, what we get from this is this percent increase. So we're seeing that there's essentially a 20% increase in this sale tax from what it was to what it is now. However, this 20% right here, it's only plausible if spending remains the same. And what we know of taxes is that when this sales tax goes up, people are going to spend less. So because people are going to spend less as the sales tax increases, we're not actually going to see this actual 20% increase in tax revenue. We're still likely to see some sort of increase in that tax revenue, but it's likely to be much less than the 20% because people will just be spending less. So for an example, let's suppose that when we're at this 5% tax rate, let's suppose that people spend $100. Meaning that our tax revenue in this case would be equal to $5. But now, supposing that this tax rate has increased to 6%, let's say people are only spending $90 now, right? Where they're spending less, like we said. In this case, the tax revenue is only going to be $5.40. And if we take the difference between the $5 and the 40 cents, we're really only seeing an 8% increase in tax revenue. So what you can see here is that because people are spending less as a result of the increase in sales tax, we may see an increase in the tax revenue. We're likely to see that increase, but it's not going to be as much as that 20%, even though mathematically, what we did in blue at the top, it shows that it might be possible, but theoretically, it's unlikely to happen.